the United Nations member states in 2015. That's a very important year, so do remember that. Provides a shared blueprint for peace and prosperity for people and planet, now and into the future. At its heart are the 17 Sustainable Development Goals, which are an urgent call for action by all countries, developed and developing, in a global partnership. They recognize that ending poverty and other deprivations must go hand in hand with strategies to improve health and education, reduce inequality, and spur economic growth, all while tackling climate change and working to persevere our oceans and forests. So today, looking at sustainable finance, we'll be focusing on the nexus between finance in small open economies in the ECCU and how it can spur our member states in achieving the SDG targets. Here I'm focusing on those most critical goals, where we have good health and well-being, gender equality, affordable and clean energy, decent work and economic growth, reduced inequalities, responsible production and consumption, climate action, and life on land overall. Next slide. Oh, we're already here. Oh, thank you. Right. So, right. I've sort of pulled together what are the principles for mainstreaming gender in policies and frameworks. And this is what the UN General Assembly prescribes. And it will be what is provided in terms of guidelines and standards that financial sector policymakers use to develop frameworks that will support sustainable finance to finance the Sustainable Development Goals. And with that, there are quite a few terminologies coming to the fore where we have inclusive sustainable finance. What does that really mean? Inclusive green finance, and what does that mean for us? It really refers to practices in sustainable finance targeting vulnerable, marginalized, and excluded population and economic sectors to build financial and social resilience, while mitigating the exclusionary effects resulting from sustainability and climate-related policies and actions. So today, my panel will walk through how they're making a contribution to reduce and mitigate these exclusionary effects that we see every day in our lives. And most of us can certainly speak to some personal experiences. So with that, I will invite Mr. Gordon Julian to share some key points on what Republic Bank has been focused on in right now. As a financial institution, Gordon, with significant regional influence, how is your bank integrating sustainable finance into its core operations? Are there specific environmental and social and governance or green finance initiatives that reflect a commitment to equity and gender inclusion?
Thank you, Madam Moderator. Good morning to my fellow panelists. Good morning to those in attendance. Thanks for choosing us. I know that there's a competing panel upstairs, and so I'm very happy that you have chosen to be downstairs. And I also want to acknowledge those persons who are listening via social media and via Zoom. In answer to your question, well, you asked a question initially about, whether we should be engaging in sustainability and all that type of thing. And I'll just use a response that I've adopted from my Trinidadian friends. Is like, you're asking answers, right? The answer is obvious. Republic Bank has been in existence for 187 years. We have a long, proud history of being in the region, having started in Grenada from 1992, having acquired 51% in NCB Grenada. Since then, we are represented in 16 countries around the world, mainly within the region. The idea of getting involved in sustainability, it was an obvious decision that the bank took. because recognizing a small, independent developing state, SIDS, there's a significant impact of climate change on our country. So the bank decided to take a leadership role in ESG matters. And in October 2020, the bank became the only English-speaking bank in English-speaking Caribbean to sign on to the UN Principles for Responsible Banking. And the following year, in April 2021, the bank also signed on to the Net Zero Banking Alliance. And so having signed on to those various international standards, it demonstrated the bank's commitment to align its strategies with those global and international standards. Since then, there has been a commitment to sort of take action and to deliver on the commitments that were made. There are a number of initiatives that have taken place, mainly at our group level in Trinidad. And over time, we see them being rolled out across our networks. So there are a number of things that we have done. We've made a commitment of $200 million in climate finance, and we're tracking to see how well we're doing across our various jurisdictions. So far, we have disbursed 83% of that $200 million US, and we have about 3% from within the Republic Bank, the EC area. Now, I rather suspect that 3% is maybe understated because, it requires a level of, providing information to our group who track that type of that target. And I know that we have done a lot of work. We've supported a lot of entities within the region or who are involved in sustainability. And I suspect that some of those numbers are not reflected in that 3%. So what I would say to you is that we're actually tracking higher than what has been reported. We have also made a commitment to provide $100 million in agricultural financing. And that's really to help, build productivity within our agricultural sector, recognizing that there is an opportunity to reduce our import bill, to empower persons in the rural communities, our farmers, and get them to produce what we consume. It also requires some level of training, upskilling, and we have been providing, seminars and other training sessions to upskill those persons. We also recognize that there's an opportunity to build a level of awareness within our population. And for the first time, Republic Bank embarked on what is called a Sustainability Expo. And that took place in the middle of September this year, where we brought together over 3,500 participants, including 18 schools, between sponsors, exhibitors, and so forth, and really helping them raise awareness in terms of the whole idea of sustainability within our region. As Professor Robinson said last night, the idea of resilience is not an option. It's an expensive necessity. And I think Republic Bank, they've demonstrated the need for getting involved in that type of thing. So that is going well, and we are hoping that expo can be replicated across our group, across our subsidiaries. So in time to come, we expect to see similar expos being held within the EC area.
Where was this expo held?
So that expo was held in Trinidad and Tobago, in the middle of September last month.
Great, I missed that. September, and you said, you have been saying that you expect to roll out some of those initiatives that has been happening in different islands across the region.
Yeah.
And based on what you've shared so far, one thing stuck, that 3% of that 200 million, I have to pause on that.
Yeah.
And more or less ask you, do you have any examples of possible initiatives you all have, or businesses that you all have supported in the Eastern Caribbean? Yeah.
So I'll say to you that we have some real life examples of companies that have been involved in sustainability projects. We have in Grenada, we have two good examples out of Grenada. We have a rum distillery company that have been embracing sustainability practices. We've provided them with working capital support. There's also a farm, let me just check the name, of that farm, and they have been involved in a number. Excellent Farm Limited, we've provided them with working capital support, and again, they have embraced quite a significant amount of sustainability practices. In St. Lucia, we have provided support, and we have a long-standing relationship with Jade Mountain and Chasney. That's a high-end hotel facility in St. Lucia, and they pride themselves in embracing sustainability practices in terms of their water management system, in terms of the consumption of electricity. They use a lot of natural lighting, minimize on the use of AC units, and using more natural airflow and those kinds of things. So these are relationships that we are proud of. Right?
And just to close it off, in terms of your introductory remarks on Republic Bank's footprint when it comes to sustainability and financing those initiatives, if you could at least, based on the examples you mentioned, like I guess I'll leave it up to you, which of those, just give us a snippet or some insight into equity and gender. How has that been incorporated in any of those initiatives? Right.
So apart from the fact that those entities, they try to ensure that there is gender equity in terms of pay and that type of thing. So these are standards that they have upheld. One of the recent developments at Republic Bank is that at the end of October this year, we just had the graduation ceremony of our Entrepreneur Builders Program, which is really highlighting and providing support to women entrepreneurs in business. So we had 54 women who graduated after 6 months rigorous training program that was launched on International Women's Day on March 8th this year, and they graduated. So we had 54 women across the Republic Bank group, many of them from within the region. And these women, as part of after gone through that rigorous training program, the bank has also made available to them financial support in terms of a small business credit card and an overdraft facility between $3,000 to $5,000 based on their needs and based on their ability to pay. And that is expectation is that will give them the startup that is required to get them going in terms of their various fields of endeavors. So that is something that we are very proud of. We have done it for a couple of years now, and we'll expect to continue doing it. And it all falls part of our Power to Make a Difference program, where we highlight the whole issue of sustainability and providing support to minority in our environment and in our economies.
Thank you so much, Gordon, for sharing those with us. Quite a few initiatives and programs that Republic Bank has been rolling out, and we'll be happy to hear more, and I trust the audience will have some questions. Yeah. Randy, I will call upon you to share with us, given that credit unions are typically community-focused, how is your credit union, you're the president of the Credit Union League or Credit Unions in Grenada, adopting the growing importance of environmental and social and governance factors and sustainability? And of course, what role does equity and inclusion play in your sustainable finance strategies?
Thank you, Madam Chair, and good morning. Good morning to our panelists, and good morning to everybody. Could I see the hands of all those who are part of credit unions? So I'm talking to my people. Community focus, people-centered, that's what we do. Every single thing that we do in a credit union, we have people high on our agenda. And I mean, I'm happy that I heard some of the initiatives that Republic Bank is doing. It seems as though Republic Bank is peeping across in the credit union sector.
Oh, really?
But seriously, as it relates to adaptation, we have been making some serious strides. Based on where we are living, as Governor said, we cannot really change our geography. So climate change is real. And just to give you a typical example, in Grenada, this year, we had extreme droughts. Then we had Beryl. And just a couple of days ago, we had floods. So already we are affected by those extreme conditions. So adapting and putting systems in place, we have no choice. So credit unions, for example, have been speaking to their members head-on. Our loan officers, for example, are not just selling loans. but they are providing advice as well. So somebody want to buy a vehicle, we are saying to them, hey, consider hybrid, consider electric. You want to build a home, we are saying to our members, stop, pause. You should not be spending 60 cents in every dollar on fossil fuels or energy generated by fossil fuels. So we are encouraging our members to go green, put solar on their homes. In fact, almost outside of every new home that's being built right now, people are putting solar lights. So we need to take in some serious steps in educating our members, let them know that the challenges outside there are real and we have to deal with them head on. We are also trying our best to educate the younger members on the whole importance of putting things in place for rainy days. So, for example, because of what happened with the drought situation in Grenada, credit unions have been putting systems in place and offering products where persons can get loans at reduced interest on the purchase of water tanks. Because the drought that we had this year was, I mean, oh my goodness. For those who experience it, it's tough. And a place where you have rivers and you have rainfalls, if the rain's not falling, we are in trouble. So credit unions in Grenada, I know within the sub-region as well, we are looking at how can we invest heavily in our people, create a kind of awareness so that people know that gone are the days where you can just feel comfortable living in the Caribbean with just sun and sea. Now we are faced with different challenges. So adapting and thriving, these are some things that we are doing.
And that's awesome because we all felt the sun this summer. We definitely did. And I'm like, I hardly use hot water anymore. I welcome the cold, no matter what time of day. So Randy, just to expand on, you mentioned a lot about credit extension and how you're allocating credit. Do you see any dynamics in terms of gender there? Additionally, we know you started with credit unions and on community-based, improving access. You all are high on financial inclusion. And financial inclusion and social resilience is some of the priorities that are embedded in inclusive, sustainable finance. So do you see any gender dynamics in terms of your membership and as well in terms of the extension of credit? What do you see when you think of access to vulnerable groups, women, entrepreneurs mentioned? Share with us some of that.
We serve mainly the underprivileged, quote-unquote, the vulnerable, the 40% that Professor Robinson spoke about last night. We believe that we cater for the 40%. The data is showing, interestingly, and generally speaking, when we hear gender, we tend to focus a lot on the women. But the data is showing that 3 in every 4 employee of the credit unions are females. The data is also showing that 60% of the loans disbursed are disbursed to women. So when I hear gender, I pause and I say, we have done a good job in taking care of the females around us. I think we have to flip a little bit and think about gender from a male standpoint, because I taught in an all-girls school and I have 2 daughters, right? And I believe right now, men are being marginalized. So for example, when we offer training, we are seeing more female taking advantage of those things. When we look at persons who are applying to serve on our boards, we are seeing females coming through. And so the question is why? Maybe it goes back to our education system. Maybe something is happening there where we are losing the fellas. In fact, in Grenada, between the years 2018, 2023, the top 3 credit unions were headed by females.
Yeah.
3 out of the top 5 financial, including the bank, 4 headed by females. Out of the top 5 financial institutions we had in Grenada, headed by females. So something happened well for women, and I applaud women among you who are empowered. I think we have to.
These are some amazing statistics, especially when it comes to the leadership roles and credit extension, because we know women leading businesses there. That is a focus area under the sustainable goals, and how they're supported access to education. I mean, not only in the Caribbean, but we see sub-Saharan Africa and the Asian territories that universal education, it is like the key to enabling the achievement of the sustainable goals. Just like energy is the lifeblood of economic activity, it starts there. So, Randy, thank you for sharing those introductory remarks with us. And I'm looking forward to what more you can share, especially on men are being marginalized. Let's go to Daniel. Daniel, what I would like to hear from you, and I hope our audience as well, at the regional level, share with us that perspective. What role does GGI play in advocating for sustainable finance that prioritizes environmental, social, and governance principles or sustainable finance? And how do you ensure that equity and inclusion are being promoted? Please share with us some of your insights on that.
Certainly. Thank you, Karen, and thank you, all the panelists, for your interventions. Okay. Yep. And thanks, ladies and gentlemen, for joining us here in person and also online. Maybe I'll start first with a question. Randy started with a question as well. Prior to today, how many people were familiar with GGGI? Any hands? Okay, we have a few. Oh, great. All right. There we go. So I'll take a moment to introduce GGGI. We are certainly not a financial institution. So I think it's important to couch the work that we do. We're an international intergovernmental organization. We're based out of Seoul, Republic of Korea, but we have operations in over 50 countries around the world, including here in the Caribbean. Our partner in the Caribbean, the Eastern Caribbean, is the OECS, so we have offices within the OECS. And we provide, ultimately, our mission includes inclusivity. Our mission is to support our members to transition to low carbon, environmentally sustainable, socially inclusive green growth. So that's part of the mission statement at the forefront of our work. And we do that by working with a range of stakeholders, primarily, well, not primarily, but kind of where we're couched is with governments. So we'll be embedded within strategic ministries within our member countries, ministries of finance, economic development, climate change, et cetera. And we work with them. Ultimately, we bill ourselves as a trusted neutral advisor, helping government to achieve their sustainable development goals, their NDC contributions, their climate actions. So in that capacity, we'll provide support on the policy side, so creating an enabling environment for investment, but we also certainly, part of our goal or the work that we do, a large majority of it now, is supporting governments to mobilize climate sustainable finance for priority development projects to help meet those goals. So GGI, we have a substantial sustainable finance capacity as an organization. Since we've been established, we've helped mobilize secure investment commitments for low carbon resilient projects exceeding 10 billion USD. On this side, we work with our member governments to help them identify, design, and structure suitable financial instruments to finance resilient low-carbon development strategies. We work directly with our members, sovereign states, and the private sector to design and secure sustainable and climate finance instruments, access international climate finance, and crowd in private sector investments in climate for climate change actions. So this includes a range of different activities, the design of climate finance instruments, such as debt for nature swaps and thematic bonds, as well as greening the banking sectors, building the capacity of local financial institutions to identify, screen, and mitigate climate and environmental risks in their portfolios, and ultimately contributing to the overall resilience of the local financial sector and therefore the economy. We like to say that there can't be sustainable development if the financial sector doesn't have stability. So this is a big part of our work.
Right, and financing sustainable development goals ties right into sustainability. And could you just share, you mentioned some work that you guys are doing, any examples of what you've delivered so far, for instance, in St. Lucia?
Yeah, I think, so what we're working on now in St. Lucia, well, a number of different sustainable finance activities and work streams. We're supporting St. Lucia issue their first sovereign blue bond. We've been helped them develop their blue bond framework, where we've taken that through first and second party opinions, to finance a priority project for wastewater treatment facilities. So we've now also engaged the technical firm that's delivering the design, and we're hopeful that by next year that first blue bond will be issued and help raise funds upwards of 100 million USD, again, to finance this wastewater treatment facility, as well as other projects in the fisheries sector in particular. We're also supporting St. Lucia government identify green financing mechanisms, whether that's within the St. Lucia Development Bank or a standalone entity. And then probably I think what's more of interest here is our sustainable banking work, where we're working with LFIs in St. Lucia to help them to build resilience by leveraging their capital allocation capacity to drive enhanced climate resilience in St. Lucia, right? So working with supporting financial institutions to better participate in climate change efforts by helping them access climate finance, improving their strategic planning, developing financial instruments and mechanisms, and building their capacity. So helping them identify ultimately climate risks in their portfolio, how to manage those risks, so developing environmental and social management systems that will help to monitor and then build and bring to market resilient products.
Great. And it's quite interesting to hear of all these initiatives, and I always we must try to bring it back in terms of addressing the issues of diversity, inclusion, and equality. So with that, I will open the floor to a first round of questions from the audience. And we do have our Chief Director of Policy, Tracy.
Thank you. Thank you, Kieran, and thank the panelists for the contributions, and quite diverse. I'd like to hear all of what the public is doing in the region in terms of helping us with that transition, and especially the work also that we're doing with the blue bond in St. Lucia. I think there's another aspect though of diversity and inclusion that perhaps we're omitting here, and I guess for me it's close to home, but it's one that has to do with how we treat with the neurodiverse, the disabled, and the differently abled among us, and how as financial institutions we accommodate them and their needs, and how as an economy and a society we accommodate them and allow them to fully contribute towards that whole sustainable development agenda that we are pursuing. And also to speak a little bit to the Office for Financial Conduct, because that is one of the things that we are going to be pursuing in the context of market conduct regulation, to see how our licensed financial institutions are also accommodating the neurodiverse and the disabled among us. For instance, your websites, how do you accommodate for the impaired, the visually impaired, you know, and all of that. So I think that's an area that we also need to focus on and to really try to look at in terms of when we speak to inclusiveness in our sustainable transformation agenda. And we will find that that a lot of those people often have very significant contributions to make if they can be accommodated to allow to develop to their full potential. So that's my contribution. Thanks.
Thank you, Tracy. And this is very important, especially when you think of that last point you made, that if their participation can be facilitated, and this is exactly what inclusive, sustainable finance should be addressing. They are members of the society, and being able to set up businesses and be active participants in our society is what we all will benefit from. I will take a few more questions. Yes, with Mr.
Good
Frank.
morning. I do not have a question per se, but I want to just basically acknowledge the good work that the financial institutions are doing within our region. I heard of Gordon talking about providing financing for some of the businesses in Grenada, including Excellent Farm that is in the business of producing poultry. Now, I'm also concerned that in the Caribbean, we have the cost of feed that is a bit on the expensive side of things. When we have the agro-processing plant in Grenada where we create the feed and other type of products, yet the farmers in Grenada are finding that product to be a very expensive venture for them. And so I believe we may have to move to the point where we open up that sector to allow other players to come in so that the competition can drive the reduction in the price for those products that the farmers need as import. Now again, I think that would augur well for import substitution, especially in our meat products. I mean, over 75 to 80% of our imports are for things like chicken parts. We can do better than that, I think, in the region, because we do have the space, we do have the technology, and I think we need to basically enhance that particular area to ensure that we can guarantee our food security in the region. Thank you.
If I may comment.
Just let us take one more, and then we'll come.
Good morning, everyone. Very interesting contribution so far. As one of the possibly only representatives from a financial intelligence unit, I think it's always my duty to represent for my brethren. And by that, I will say that the issue of inclusion is critical, and something to remember that even from a regulatory standpoint, it's something that we want. And unfortunately, you find in financial institutions, it is pitched that the regulators, the financial intelligence units don't want that. But we do. In the event that there is something criminal in terms of even ensuring the security, the social and economic security of the people, if they're not using our financial institutions, we can't detect it. And so any sort of mechanisms that bring people to your institutions, it only augurs well for the country, for the region as a whole. And that's something I think financial institutions should always remember. So there is also that side. Those of us who are fighting crime want the people to come to the financial institutions. We can't, if there's no paper trail, there's very little that we can do. So I always want to remind persons of that. Thank you.
Thank you, and thank you for introducing yourself. I'll encourage everyone to please do so. And with that, before we move on to the next question, I know, Gordon, you wanted to come in briefly?
Yeah, briefly. So I just want to speak first about the comment that was raised by Chief Policy Director Tracy.
Okay.
Sorry, on the how do we support the different labels within our communities and so forth. And I think that's a valid question, and I think that more can be done. We are making an effort in that regard through our power to make a difference. We have been working with partners across the region. We just launched our new set of partners this year. And one of the focus is really supporting partners who are involved in the supporting the different labels within our communities, whether they're blind, whether they're special needs, and so forth. And that is working well. How do we support them in terms of their day-to-day banking? These are things that we need to consider in terms of how we construct our branches, how we design our branches, and how we support them in terms of use of the ATMs, the online banking. So more can be done in that area, but I think we're trending in the right direction.
Okay.
Dennis raised the point about the supporting in terms of raising the price of feed, which is a very important input for our farmers who are involved in poultry and so forth, and other livestock. And again, we have to look to see how we can leverage what we have. When you look around in the region, we see a lot of things going to waste. We have bananas and mangoes that's going to waste. How can we utilize some of those things in terms of generating and creating feed to support our livestock industry? One of the byproducts about entities that are involved in resilience and sustainability is that they tend to be more innovative. As you look for ways to become more resilient, there's a tendency and a likelihood that you're going to identify more innovative ways of doing things, more products and services, and so forth. So we want to encourage our entities, to get involved in and innovate and find ways to become more resilient. Because when you do that, you become more attractive to investors, more attractive to customers, a higher level of employee engagement. So these are all great things that we need to aspire to. Yeah.
Yeah,
Good.
that's
Yeah.
Daniel, you wanted to make a
Yeah,
few?
just a couple, also speaking to Trace about inclusion. This is specifically disabled peoples and communities having their inclusion as well. This is, we've just wrapped up this year a green entrepreneur project, again, primarily focused on women and youth. Where we dispersed 1.2 million in grants to 6 OEC member countries here in the Caribbean, and 65% of those being women-led startups and micro small enterprises. But in the Pacific, we had a sister project as well, where we actively engaged, trying to engage developmentally challenged people with disabilities, entrepreneurs as well, and we did learn quite a bit about how do we engage these set of stakeholders in financial inclusion. And we talked about the physical component of banking and institutions. How do we access that? But even also on the digital side, like accessing, creating bank accounts. And big challenges, and how do we support these stakeholders? I mean, the first step is sort of being able to enter that space, which tends to be that a bank account, and the challenges there is even that in the Pacific we found very cumbersome and challenging. So as a first step, before we can really take other substantive steps, that access and beginning to participate in the financial sector. So there is a lot more to be done, and that's also, I think, sometimes it falls down the list of stakeholders to engage in that regard.
Okay.
Just a quick comment. Within the movement, disability for us is not inability. In fact, the whole makeup of the credit union, where the governance structure says one person, one vote. So irrespective of your capabilities, there is a voice for you. In fact, at our AGM, one of the credit unions AGM, there is a blind man. He's one of the most vocal member in the AGM. So there is a room within the movement for persons who are, quote unquote, differently abled.
What about employment?
Go ahead.
What about employment of neurodiverse and differently abled people?
Just a quick comment on that again. And I think that is the right thing to do, and for a couple of reasons. I mean, when you open yourself up to a DEI sort of approach to recruitment, it's not just about making a quota, to say, well, I have X amount of differently abled. But you may find that the brightest minds and the best skills reside in persons who are of a different ethnic origin, different gender, or differently abled. So I think that you have to widen your nets and open yourself to everyone, right? Whatever the abilities are, whatever the gender, whatever the ethnic race is, and get the best people for the job, right? And not only a DEI, but they have to feel belonging. Right? They have to feel that they are part of the team and they're welcome, right? And I think that is something that we have acknowledged and we are embracing as we go forward.
Good. Great to hear that. And we did have 2 other questions. I know we do have to wrap up shortly. Anyone on this side? I thought I saw a question on this side. No? Okay, so with that, just to sort of give a little bit on where we are, we know that our institutions in the region are doing quite exemplary work, and the results speak for themselves a lot. It is still a very nascent sector in the ECCU, but taking a global perspective on what is the global progress on the implementation of the Sustainable Development Goals. The United Nations General Assembly 2024 report in May shows where we are, and in terms of those areas, we see there is regression. Those areas in red speak to a regression in some of the goals in terms of how much has been achieved to date. And areas such as education, which receive quite a bit of focus, gender equality. Overall, we can sum some of those up under poverty. Where is it at? And the results show with COVID-19 would have wiped out at least 3% of global progress, 3 years, I should say, of global progress. And efforts to improve or reverse that are critical. We also see in gender equity and equality, the participation of women. Let's start with women in public life and managerial roles. It still remains a bit distant, and that is goal 5. At the current state, achieving gender parity in managerial positions, they say, will take 176 years, right? So let's zoom in on the Caribbean and what that means globally. Here I've pulled some of the latest data of women as a share of global employment in different sectors, where we're looking quite a bit on their central banks as well. Let me stand on the podium just for, in terms of central banks. And we do have international financial institutions, some of those who are the multi-donors, the development partners who promote those practices in terms of inclusive, sustainable finance. They set the agenda, they set the goals to be achieved. Where are they in terms of women as a share of employees? And of course, zooming in, where does the ECCB stand next to the global averages? And for instance, we see out of 287 employees at the central bank, we have at least almost 60% being women. And when we think of our executive, likely 67% as well. On the board, we see 38% representation, and just looking at in managerial roles, 71%. What the data shows is that in the Caribbean, where generally it is recognized by institutions like the IDB, who does quite a bit of work on gender diversity and inclusion, that that is strong, that has grown quite well in the Caribbean, a lot of effort, and we are somewhat of the trendsetters or leaders in that area, and we will continue to be, and ECCB is certainly setting the example, as we tend to do. I'm not only praising ECCB, but also our change champions seated right here. We've heard the contributions that Republic Bank is putting in place and is rolling out, as well as the credit union. Randy shared somewhat of a paradigm shift, what is happening. Men are being marginalized.
You should have had one more row here, the Monetary Council, and what you would have had 0%.
So, thank you, Tracy. And this goes right into leadership roles and managerial roles, where they say urgent action is needed to challenge biased social norms, eliminate harmful practices, and change discriminatory laws. Increasing women's leadership roles and investments in gender equality are crucial at the regional level, national, and global levels. Thank you, Tracy, and that was an eye-opener. So with that, I will invite the panelists for some brief closing remarks on each of your parts. And if you could also just speak to where do you see in terms of the financial sector, regulatory support, policy, incentives at the public sector level to support what financial actors like yourselves are doing and see the need for in your closing statements. We can start with Daniel.
Maybe keeping in line with this quickly, at GGGI, we've achieved 50% gender balance last year for a population of staff of 700.
Wow.
Which is great. Here in the region, I think we're 70% in my team here in the Eastern Caribbean, 70% women on our team.
Wow.
So, and one day, I mean, we have Stephanie is here. One day, I'm sure she'll be leading it. So that will making sure that our senior management as well. But yeah, I think in terms of where things are heading and the support that we see is needed in to support financial inclusion, I think it's a lot of capacity building. This is where we see a lot of support on different topics, climate change, supporting policies on sustainable finance, introducing a lot of the LFIs that we're working with, and I think I hear it's happening and we see it happening, but really starting to raise awareness about ESG issues, the climate and environmental risks, assessment, monitoring, and reporting, having these systems in place. So I think we're starting, but more can be done and needs to be done, quite frankly. And this is where we're working with the private sector, the LFIs in countries, but also with the ECCB to how do we collaborate together and use the platform that the ECCB has and the engagement to start to really lean in strongly to support LFIs in setting up these systems, which include a lot of inclusion, have the potential to include a lot of inclusion. In GGGI, in all of our projects, we have a gender and inclusivity markers that we design our projects, and these translate into deliverables with partners. So, yeah, I think there's significant things that can be done. I think they're there. It is a matter of working with partners in the region to match the interests that the LFIs have and supporting them to meet their goals. Thank you.
Thank you, Daniel. And Randy?
I think going forward, we need to be more strategic in our approach. We will deliberate and intentional in the things that we do. We have been making a lot of strides, but that piece of data right there, I mean, I'm happy that we were able to stamp on ensuring that the Caribbean reverse some of the trends of the past. But in doing that, I still believe that we are missing the mark, and we are not creating that kind of balance between women growth and men growth. And I really think if we're not careful, we might be losing a generation later on, because the question is, who will our daughters marry? Where will the support be in the homes? And already we are seeing these challenges manifesting themselves in our society. So I would really like to see, whoever is responsible, create that stronger balance between women empowerment and men upliftment. I would really love to see that. And I think the ECCB is well placed to create a harmony.
Thank you. And that's a challenge, Executive. And Mr. Julian?
Yeah, it's really been a pleasure to be on this panel. And if I would start with the statistic, in terms of our gender balance at Republic Bank EC, at the clerical level, as with most banks, I think it's dominated by women. You'd see more women tellers when you walk into the bank. At the managerial level, at the management level, it's more skewed towards men. But I'm pleased to report that at our very, very top, our chairman of our board is a woman, our managing director, Tracy Baffonomu, is a woman as well. And we also have at our country level, the heads of our countries. We are in 6 of the 8 ECCB territories, and 5 of the 6 heads are women. So we are proud of that statistic. In terms of where we are going, some of the challenges, I think that, resilience and sustainability is not just the right thing to do, but I think is from a business standpoint, from a profitability standpoint, from a survival standpoint, it makes sense. I think that there are some challenges along the way that we need to overcome. First and foremost, the lack of legal and regulatory framework, the absence of laws, is something that we need to work on. I think that the fact that we have in this very discussion is part of the panel. I think the ECCB has led by example. The ECCB has taken a very leadership role in the whole, sustainability issue. So I think that we can look forward to great things coming down the pike in terms of the, enhancing in that area. There's still a perception that, sustainability is risky. There's lack of data out there. Sometimes we are perturbed by the fact that we don't have information. But if you speak to the larger countries that have gone ahead of us, they too, they have those same challenges, but they are moving ahead, they're forging forward. So I think we should not be daunted by the fact that there is, absence of information. There's lots of support out there through GGGI and so forth. So we need to leverage that and sort of overcome some of those challenges. And finally, in terms of education and awareness, public education and awareness, we can't be led only by the central bank and the financial institutions. We need everyone involved to find success. And I think that Republic Bank has sort of led the way in terms of our Sustainability Expo, where we've had a high level of interest. We're looking forward to launching those expos within the ECB area, so look out for that. And I think that's really going to help in terms of raising the general awareness and public education on sustainability. And it's only then we'll start seeing things moving forward. We're still some ways to go, but I'm really optimistic about the future. Thank you.
Thank you, thank you. And to all the panelists, just a closing thought that things are getting better, and with significant improvement in diversity, gender equality over the past 2 decades, we see some stakeholders, like our very panelists, the organizations they represent, including globally, they are walking their talk on the importance of such matters for the overall sustainable development transformation that we need to see in the region. With that, I'll thank you for your participation and engagement with us, and wish you the very best for the rest of the day. Thank you.
Thank you. Yeah, well done.
Thank you, Kieran, and the panelists for this interesting session. So now we'll have just a very short break, 5 minutes, while we set up for our next session, which will look at regulatory compliance in the ECCU. So we will resume at 11:17. Thank you. Hello. Okay, so if we can all settle back down so we can resume our second panel discussion this morning. You can sit down in front still and then she'll call you up. Right there, come on. And our second panel discussion will be on regulatory compliance in the ECCU as it relates to privacy. As we move further into the digital age, issues around data protection, privacy laws, and regulatory frameworks have become paramount, not only in safeguarding consumers, but also in ensuring that financial institutions meet evolving international standards. How can we balance the need for regulatory compliance with protection of individual privacy in the ECCU is the burning question here. So to lead the discussion, to discover this answer to this question, we have our moderator, Ms. Donette Dowers. Donette is an examiner in the Financial Sector Supervision Department here at the ECCB. She is a certified AML specialist and an ACAMS member. Donette contributed to policy amendments and led evaluations of international bank acquisition by national banks. So we welcome Donette, and again, I encourage everyone to actively participate in this upcoming session. Donette?
Thank you, Shari. Again, good morning and welcome to this panel discussion where we'll be discussing on a very, very topical matter, privacy, 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 regulatory compliance in the ECCU. This morning, 3 regional subject matter experts will be deliberating on the topic with the objective of providing greater clarity on the balance of regulatory compliance and data protection within our operating space in the Eastern Caribbean Currency Union. At this time, I invite our 3 subject matter experts to join the head table. As I call your name, kindly move to the head table. So I would firstly introduce Mrs. Chara Richardson? Yes. Mrs. Richardson is a certified public accountant. She is also a certified anti-money laundering specialist with the Association of Certified Anti-Money Launderers, ACAMS, and holds an associate in captive insurance. Chara currently serves in Anguilla's Financial Services Commission as Deputy Director, Supervision, with responsibility for the insurance and credit union sectors. Secondly, our second panelist is Mrs. Letitia Sandy Marks. Mrs. Sandy Marks is a barrister at law and solicitor with experience in anti-money laundering, as well as countering the financing of terrorism. She is also a certified ACAMS member and is a trained assessor with CFATF, or Caribbean Financial Action Task Force. Letitia is the deputy chairperson of the National Anti-Money Laundering Committee and the director of the Financial Intelligence Unit in St. Vincent and the Grenadines. Last, but by no least, I am pleased to introduce our third panelist, Mr. Ian Carrington, who is unable to join us in person but will be joining online. Mr. Carrington has vast experience on the subject matter, having served as past director, Bank Supervision, Central Bank of Barbados. He has also served as an experienced lead mutual evaluator. He has served at various international institutions, including as a financial sector financial expert with the United Nations Global Program Against Money Laundering, and as a senior financial sector expert with the International Monetary Fund. Mr. Carrington currently serves as AML CFD Regional Advisor for Latin America and the Caribbean through CARTAG. Ladies and gentlemen, I would now move to join my panelists. So just to continue, this morning, as Shari would have indicated, we would really love for this session to be an interactive one. So at varying points during the discussion, we'd stop to take questions, feedback from the audience as is appropriate. So just before I get into our discussion, I would like to present some context on the matter up for discussion. Data privacy and compliance has emerged as a very topical subject in recent time, and this has happened amidst a myriad of issues, including the rapid evolution of technology, the rise of cyber threats, regulations, as well as the increasing demands for transparency and accountability. What is the primary object of data privacy regulations? This is to protect individuals' personal information by imposing rules and guidelines on institutions that handle and process these data. The protection of data is critical in AML CFD compliance as it safeguards the confidentiality, integrity, and the availability of sensitive information. AML CFD systems, as we know, rely on vast amounts of data, including customer information, transaction details, and risk profiles. Hence, protecting customers' information is crucial in preventing unauthorized access, the misuse, or theft, which could compromise the effectiveness of the AML CFD efforts. So how do we balance the clash between AML compliance and data privacy? As there inherent tension between the need for LFIs to collect these personal data from their customers to combat financial crimes and the necessity to protect unauthorized access to customers' information. This, I believe, our panelists would be discussing. Consequently, I believe our LFIs must obtain explicit consent from their customers, implement robust security measures, and provide customers with certain rights regarding their personal data in order to remain compliant. The intersection of AML CFD compliance and data privacy poses unique challenges for LFIs within the Eastern Caribbean Currency Union. Many of the challenges in the ECCU can be considered unique given the shared currency and our economic interdependence. Our member countries must therefore navigate a complex web of privacy regulations, which unfortunately are often shaped by global frameworks along regional legislation and standards. As a result, LFIs must navigate these regulations with great caution in order to strike an appropriate balance between satisfying AML CFD requirements and while simultaneously respecting and complying with data privacy requirements, as failure to do so can hold great implication. And so to provide deeper insight to our audience on the subject we are now discussing, Mr. Carrington, I seek your kind input. From an international perspective, given your vantage point on global compliance trends, how do you see AML CFD challenges evolving for commercial banks within the ECCU, especially considering the unique vulnerabilities of small open economies?
First, let me thank you and the Central Bank for inviting me to take part in this forum. I was actually at the bank probably just about 2 weeks ago doing a workshop, so I'm sorry I wasn't able to come back in person, but I'm glad that I'm able to take part in this workshop discussion. Let me start perhaps with the good news. I took the opportunity of looking at the mutual evaluation reports that have been finished, what's called the fourth round. And basically, all of the countries in the region have done reasonably well in terms of having the legal framework in place to support the work that has to be done by banks and other financial institutions. Most of the countries were rated as either compliant or largely compliant, either at the time of the mutual evaluation or during the subsequent reports that were done. So the legal framework is in pretty good shape. The other thing to note from the imagery evaluation reports is that banks are doing the best job in terms of financial institutions and other institutions that are covered by the AML/CFT framework. So all the reports indicate that the greatest concerns are actually outside of the banking sector, so kudos to the banks. The issue, however, I think of the challenges, and I'm not going to speak specifically at this time on the privacy issue, but the challenges in a broader sense. And this again was revealed in the reports that one area in which banks could improve is to make sure that the measures that they take are better aligned with the risk environment. What does that mean? In the context of the region, characteristics of the environment, such as the number of international financial centers that you have, the number of company formation centers and the activity in that area. The CVI issue is something that is a challenge in terms of banks making sure that, given that this is the context in which they function, they understand the risk and that they are tuning their measures and their approach to managing risks in the context of that environment. You would all be aware, of course, of the issue of CPRs and the pressures that they have come under over the last maybe 5 or 6 years. And this is a reflection of the concern that some institutions may have, that correspondent banks may have, and the regulators of those banks may have about the effectiveness of which institutions are managing risk. So I would stop there and say that those are some, I think, of the broader issues that are peculiar to the region, and the imagery evaluation reports are saying that while banks are doing a reasonably good job, that they could do more work to make sure that the measures they take are better aligned with the risks and context of the region.
Thank you for that insight, that regional overview of what's happening currently within our financial space. It is good to know that in terms of the feedback from the mutual evaluation, that we are improving. We're not there yet, but we're getting there. So, Mrs. Letitia, noting Mr. Carrington's information on the regional landscape, it would be great to hear from the Financial Intelligence Unit's perspective regarding our commercial banks. What are some of the most pressing compliance challenges that banks in the ECCU face, particularly regarding suspicious transaction reporting and regulatory adherence?
Good morning, everyone. Okay, good morning, everyone. I think the issue of risk is a good place to pick up from because it cannot be overstated. I think one of the major issues is that lack of a risk-based approach is one of those things that cascades throughout everything. And as an FIU and as a customer, the problem you face is that because we haven't done a proper risk assessment, one of two things happens. You either treat everyone the same, and you either go too high or too low. And as a result, you can't identify what's suspicious. And we just spoke about financial inclusion. If you have no risk-based approach and you have a customer who is low risk, and you're treating that customer in the same way you do your high-risk customer, that person is going to leave. They're not going to do business with you. And it is going to completely frustrate everything. And I reiterate that as an FIU, as the ECCB, as any regulator, we want to see a properly functioning system. So we want you to apply the laws as they are meant to be applied. Right? And that includes having a risk-based approach to how you treat with your customers. The issue of customer due diligence, I think, continues to plague many institutions in that information, support, and documentation isn't necessarily kept for your customers, or it's outdated. Now, it's very difficult for you to know your customer if you haven't kept that initial information. And then to file a report with an FIU when information is completely lacking, it creates a problem. How are we to do a further investigation if you haven't taken the necessary supporting documentation? So customer due diligence and ongoing due diligence. So it's not just about collecting that information today, but in 3 years, in 5 years, depending again on the risk profile, what have you done? What have you reassessed in respect of that customer? So if 3 years later you've done nothing, you can't tell if something is suspicious, so you can't file a SAR with me. And if you file a SAR, the SAR again is not going to tell me much. You know, the types of SARs you get sometimes, it boggles the mind. So customer due diligence, I think, is very, very critical. And I think one other issue is training. Training has to be updated and relevant, right? You can't train on, I saw something recently saying to throw the 3 stages of money laundering into the garbage because it isn't always placement, layering, integration. But some entities are so proud. So you have placement, layering, integration, and then now you have a customer service representative who's never worked in a financial institution. They are going to look for these 3 things. And if they don't see these 3 things, they can't identify suspicion. So your training has to be targeted. It has to be focused on your particular institution. What are your risks? Again, go back to your national risk assessment. What is the regional situation? So if the risk in your jurisdiction is, let's say, cocaine, you can't be training on something that has nothing to do with that. How are you going to recognize that and file a suspicious activity report? So training and everything, no matter what area of your institution, it comes back to risk-based approach, and it has to be from the top down, leadership. Your board cannot be confused. Your board cannot be lost. Your board can't just show up for a meeting to collect a stipend. I don't know how it works, but your board has to understand compliance. If your board doesn't understand compliance, they're not going to allocate the resources, and that will trickle down, and we will get garbage SARs. So I think those are the critical things that affect institutions and affect the nature of the suspicious activity reports that we get.
Thank you, Mrs. Sandy Max. Letitia, fine. Okay, so Letitia, thank you very much for that insightful information. We would move to Anguilla, noting, yes, the need for the enhanced due diligence and the continuing due diligence. Mrs. Richardson, given your oversight of the credit union and insurance sector, it would be really good to hear what's happening with the NBFIs. And so could you share your insight on the regulatory landscape for NBFIs within the ECCU? And can you also tell us how the AML/CFT compliance challenges faced by NBFIs differs from that's been faced by our commercial banks?
Good morning to everyone. Good morning, and thanks to the ECCB for the invitation to participate on this panel. Very timely, very topical. So to just start off, I would like to just get an understanding of the audience. I believe it's primarily banks and maybe credit unions. Is there anyone in the audience that is representing an insurance company? No, okay, that's what I thought. It's okay, that's my area, so it's close to my heart. But nevertheless, as you would have heard, I do oversee insurance licensees as well as credit unions, which came on board more recently. So what we've noticed, and as well, just to add a little more context, the Anguilla Financial Services Commission, where I work, we are also the AML supervisor of the domestic banks. While I don't necessarily work directly within the AML department, I have exposure through working with insurance companies, the long-term insurers, they are captured, of course, credit unions. So I have a little bit of insight into the differences, as you would have alluded to, between the challenges that are faced by banks, commercial banks, versus the non-bank financial institutions. And those can be a broad spectrum. You have insurance companies, credit unions, money service businesses, micro lenders, etc. But just to start off with one observation is that with commercial banks, their compliance frameworks tend to be a lot more structured. than in other organizations. And I think that's a testament to the level of the transactions that they do, the sheer volume, and just the number of requirements that they have to comply with. I mean, they have anti-money laundering requirements, tax, FATCA, substance requirements. It's a wide range of issues that they have to contend with and ensure that they are in compliance with, and juxtaposing that against insurance companies that, most general insurers don't have that huge obligation. Yes, they collect an ID here or there, but their systems, their compliance teams aren't as built out and as fleshed out, and there's more training that goes on in the banks, and I think that's a positive on the bank side. However, what I noticed that the banks tend to have a lot more leverage when it comes to ensuring compliance of their customers. I think that's because of the nature of the business, where it's a lot more transactions. The customers, they come into the bank, they want to make withdrawals, they want to do business, and the bank can use that actually as a great opportunity to compel compliance. Let's say if they've been following up with this customer to submit a document, update their due diligence. At times, they can kind of hold them hostage in a sense to say, okay, well, we can't process your transaction until you update X, Y, and Z, right? And not in every case. I guess in extreme cases where it's something that they really need. I've seen that being done. Whereas when it comes to insurance, you take out a policy, you probably don't even pass back for a few years. I mean, you make your payments, but the insurance companies are not as well positioned to say cancel the policy because you didn't update your ID. So that's one of the differences there. As well, I think one of the biggest things that I've noticed, especially with the banks in the region, most of them are locally owned, and a lot of them tend to have to rely on themselves when it comes to compliance and building out the entire compliance program. When you see insurance companies, majority that operate in the space, they actually form part of a wider group that's cross-border, multinational, and they tend to have more centralized compliance systems where they have a team that's at the head office. They purchase one product and they can roll it out to the rest of their local operations, whether it's monitoring transaction software for due diligence. They have teams that you just send all the information to the head office and they conduct the due diligence, and that's a great efficiency for those entities that happen to be part of, cross-border groups. We have a couple of banks. We have, of course, Republic, and we have FCIB, but the majority of the banks, they're self-sufficient. And so that also then translates into more cost for those entities that have to be self-reliant, rather than benefiting from that efficiency of having support and backing from your head office. And so one other thing that I would state is that when it comes to banks in this region in particular, we've all been witnesses to the great de-risking era, which in some senses continues today, and alluding to what my learned colleague Letitia was making reference to earlier, and that when it comes to trying to apply a truly risk-based approach, sometimes commercial banks tend to apply standards a little more rigidly because of fear of their correspondent banking relations being threatened. And so sometimes that can be a factor impacting how it is that they actually, implement and apply those standards.
Thank you for that, Charo. Noting the concerns and the gaps identified by Letitia and Charo, Mr. Carrington, can you tell us what, if any, recommendations CARTAC has as a regional institution for enhancing the AML/CFT compliance among financial institutions within our territory? And this, of course, is without imposing excessive regulatory burdens, as Charo would have just alluded to.
Yeah, interesting. I think a number of the things I would have said have been covered in the conversation that we've had since I last spoke. But a central issue is this idea of satisfying yourself or justifying or demonstrating that you are attuned to the risks that you face. An example in a mutual evaluation, this is not in the ECCU, but one which was done in the Caribbean region. last year was an assessment in which it was clear, I think, that the authorities of the country, which was an international financial sector, were not really focusing on the transnational nature of financial flows. So they were not necessarily looking at the criminal activity that was taking place in the markets in which their financial institutions or the companies which were formed in their country were functioning. So that's an example. If you're a financial institution and your customers are persons that link you to economic, financial, and criminal activity that are taking place outside of your borders, you have to demonstrate in the work that you do, in the CDD that you do, in the monitoring that you do, that you're cognizant of this risk and that you're taking the kind of measures that are appropriate, given that that is a key factor in the risk environment. Charo mentioned a very important issue, I think, and this comes across in the military evaluation reports, and that is the challenge that domestic banks face. Virtually in all of the reports, they observed that while the international banks and the regional banks had systems in place that met a particular standard, that the local domestic banks were falling short. And Charo mentioned, of course, the challenges that they face. They don't have the resources, they don't have the support environment. But nevertheless, if you are taking on board certain risks, unfortunately, it is not unreasonable to ask you to have measures in place to manage those risks. So one of the things that I think that needs to be done in the region is to see the extent to which the countries can support those smaller banks from perhaps some kind of guidance, training from the supervisory authorities about what is expected of them. But they are clearly, as far as the banking sector is concerned, they are clearly a weak link in the chain. One of the things I would say is that all of the responsibility doesn't rest with the financial institutions. There is some level of obligation on the governments in each of the countries to make sure that they have an environment that supports the institutions in the as they follow the objective or pursue the objective of effectively being in charge of managing their risks. One of the things that has come up recently is the whole issue of beneficial ownership and the availability of beneficial ownership information. The new standard requires that beneficial ownership information should be easily available, should be up to date, and so on. And this is an area in which the governments in the region, this is an example of a step, an issue that governments in the region probably need to take a look at to see what they can do to make sure that they create the enabling environment that allows the bank and other financial institutions to effectively control and manage this.
Thank you, Ian, for your insight in terms of how we can improve our framework within the region, non-bank and our commercial bank to strengthen our AML-CFT framework. Charissa, we have heard Natisha's views on the AML-CFT frameworks in the ECCU as well as their associated gaps. We have also heard Ian just spoke about recommendations on enhancing regulatory compliance within our financial institutions. Can you tell us your thoughts on how our regional financial institutions can better collaborate with the regulatory bodies to streamline AML-CFT processes while ensuring that these processes remain robust and effective?
Okay, so there are many ways that we can use collaboration with each other and the relevant stakeholders in order to ensure that these processes can be streamlined and optimized for better compliance and better outcomes. So one of the first, we heard Governor Antoine speak about it this morning, of course, is harnessing technology, right? That's a low-hanging fruit where, there are many capabilities that are now available through AI and all of the developments to assist and aid organizations with automating certain processes, using the monitoring capabilities, and assisting them with just overall having a better view and a better handle on the data, because there's a lot of data that's coming in, a lot of transactions. Of course, you can't expect to be able to monitor that manually. So one of the things that can be explored is maybe developing integrated reg tech solutions. That's for any organization where you have this huge compliance demand, where you have reporting requirements to the regulator, and it would allow you to kind of house all of your data, process it in a readily available manner so that you can allow the regulator, when it's time to hand over that information, it's a seamless process, and it takes little effort because it's already there. And to go a step further, you can also look at perhaps granting some sort of secure access to the regulator so that they can have real-time access to that information, and that benefits everyone. And that's even less effort on the part of the organization to actually have to, go and pull out reports, turn over that information to the regulator. So that would assist with collaboration in terms of the regulator would assist with the build out of that to ensure that what is being produced is actually usable and useful for the regulator's purpose. So that's one area that collaboration can be beneficial. Also looking at public-private partnerships where the industry can collaborate with the regulator along with any other competent authorities, where you have all these various bodies who see all of this information coming in, and you can use that sort of forum to analyze typologies and any red flags, any emerging trends, and share information amongst each other, and that can help to develop guidance, standards for the industry, help to inform your national risk assessment, once you have that 360 view. And that can actually be done not only on a local level but also regionally, because our economies, our environments are not that dissimilar. We have a lot of similarities, and where we see one trend popping up in one island, one country, it could very well be targeting to the next one very soon. So that allows us to stay kind of ahead of the curve, and that collaboration with industry, competent authorities would be very beneficial. Also regular meetings, because in my view, we tend to only have discussions when we are at a crisis level or near crisis level, and perhaps we need not wait until that time comes to discuss, any emerging trends, any issues that we're seeing, so that we can get out ahead of it and build out guidance and frameworks to address that and mitigate before it reaches to your shores. So that's an opportunity for us here to collaborate. We can have consultative meetings as well with our licensed entities, one-on-ones. Let's hear your challenges with implementing, any part of the requirements within the AML framework. How can we help you to better address those and those sort of opportunities? And also joint trainings. While the industry needs training, so do the regulators. So we can all use the same opportunities where whether we contract with whoever it may be, to deliver specified training. You have evolving trends, you have revisions to the 40 standards. There's always something to be trained on. And so making a push to kind of regularize that or make it more of a commonplace thing where, we take these opportunities to have trainings that are targeted to the entire region across the board. It can be sector specific depending on what it is, but those are some opportunities for collaboration.
Thank you. Thank you, Charo. Sorry. And so Charo has given us a lot to think about this morning. If we haven't started practicing to try to put some of these into practice so we can, better, survive in this, climate, particularly given the level of the risk in the region. So yes. Thanks. So at this point, I am going to open the floor for any brief feedback you might have, any questions from our audience. And what I'm going to do, I'm going to take 3 questions at a time. And if it is that you have a particular regulator or Mr. Carrington, you can identify who you would like to respond or just any general question. Thanks. Okay, our director is suggesting that we get the ball rolling. I guess we
yeah.
Thank you.
Sobat Keynes, the Acting Director for the Financial Sector Supervision Department. I just want to say, I like what Charo just said, which is very important because this is something that I always discuss with whether if it's my LFIs or my team, especially I have the AML supervisory unit under my department. And I think collaboration is key. You have to collaborate with your stakeholders, with your licensed financial institutions, the national regulators, even the international regulators, because AML is a continuous thing. You have to work at it. You have to get insight from the various regulators to see what's happening, what's trending, especially you talk about the typologies. We just recently see something about a 360 sort of boat issue that we have here in the region. So, you know, collaboration is key. What I want to find out, and I know you mentioned about AI, and I know it plays a very important role. I just did a course on AI in finance, and it has a lot of advantages for AML safety, especially when it comes to outgoing, incoming wires, you know, the amount of data you have, and it helps you to process that information in a speedy manner. And a lot of reports and compliance regulations, it helps to spit out. Of course, you have to have that person who is able to interpret that information. So in terms of training persons to be able to interpret the information, not only training them to interpret, but also what information you will feed these different systems, because you put in garbage, you get out garbage. You have to know what to put in, how concise, what you're looking for, because you don't want it, in a sense, neither to be a bit prejudiced with the information it spits out. Have you seen, based on your experience, the use of AI by your institution that you regulate?
Thanks for that question, Shabbat. So, unfortunately, no, not to this point. We haven't seen where AI is used in that manner. And of course, that's an awesome use case to carry out transaction monitoring, be able to pick up on trends, you know, structuring of transactions, things that your eye might not be able to catch on your own. And of course, I like when you mentioned that you have to kind of control for any biases within the data that is fed into the AI, because if there are any prejudices that go in, then they will continue to come out on the back end. So no, not in any of the entities that operate within our region, but it's a great opportunity for them to start using that. I mean, we've seen for insurers where they use data to kind of analyze more on the claim side. You have the tracking of, you know, we put that tracker on your car and let's see how many miles you drive, and then we translate into that. Then what should your premiums be if you drive more than average person, less than average person, those sorts of things, but not yet for AML transaction monitoring, at least from my end. As I said, I deal mostly in prudential supervision.
Thank you, Director, and thank you, Teresa. Anybody else? Charo, I keep calling Teresa. Anybody else has any other questions, feedback, comments for the audience? No? That's okay.
Hi, Ron Leo. Charo, you made a comment that stuck with me, and it was with regards to the insurance companies and their ability to leverage their services to obtain further compliance from customers, which I think is very valid and quite true. But in tying that to an earlier comment which you made on how robust the general governance as it relates to AML compliance are the insurance companies versus a financial institution, it for me begs the question, if it is the reality that an insurance company does not have as much leverage as a bank or another lender or one who accepts deposits, how is it that the compliance governance in that institution is actually not persuaded to be even more robust in that way, because you don't have the leverage in the long run? And if it is also that they are governed really by the same laws, the same administration of the AML legislation, what exactly is the missing link to have that type of harmonious compliance governance in both institutions, that being LFIs, deposit-taking institutions, and insurance institutions? And it's a question that I've had for quite some time, but again, it comes since you've made those two comments and trying to tie them together. I just wanted to get your thoughts on that.
Thank you. And I think it really just boils down to the risk exposure. As I mentioned, at least in Anguilla, general insurance companies, they are not captured for the purpose of anti-money laundering supervision. They're not service providers under that legislation. So that more or less leaves the long-term insurance. And so the risk of the long-term insurance products being leveraged for nefarious activities in our region is fairly low. But that being said, because they are captured, there is still an obligation to ensure that all of the requirements are being met. They are monitoring the transactions, the payments of the premiums, and all of that. So it is a kind of delicate balance in order to try and achieve that. What we generally see is that they're just a lot more persistent with actually, contacting the policyholder, calling them, please, can you come in? At some point, they'll come into the organization, but they will be held to the same standard. So when we go in to do our inspections, we're judging them by the same set of rules and standards, but we do acknowledge that the risk is a bit different from a deposit-taking institution.
This might be controversial again. There is a phenomenon that has been affecting the region for years, and I call it mindless uniformity, where the dictates for what we should do comes from abroad. Can you give us some examples of some local initiatives where you identify some local risks and put things in place directly as opposed to things being imposed on us from the international community?
We have to be fair. And I think the first thing that I said, as well as the representative from CARTAC spoke about, is that risk-based approach. Because where the FATF is concerned, we all lobbied, we got so upset. How are these bigger powers imposing all of these things on us? And then they amended the standards. And the first one is your risk assessment. And from that flows everything else you're supposed to do. And that became the carry-on call. That was the chant. Everything based on my risk and context, based on my risk and context. So they now allowed us an opportunity to fashion the things we did within those 40 recommendations based on risk and context. But as I said, at our individual entity levels, we are not doing it. So it is a case where the laws exist, yes. The regulations exist, yes. But if you're going to do less, you have to demonstrate that within your entity, you have done a risk assessment that says, I can do less. But unless that is the starting point, we have to be fair. We cannot say all of these standards are being imposed on us if we haven't taken that first step. And that is the critical thing. Everything flows from risk, right? All of us. I am here today. I want to look nice, but I have to wear something I'm not going to crease up. So I have to think about what can I pack. I hope that the airline would be good to me. I put my suit in my backpack, right? Because I want to look nice. So I had to first off, what is the risk and how am I going to respond to that? Right? So if as institutions, we're not looking at our institutions, and when the ECCB comes in and does an on-site and says you're supposed to do A, B, and C, right? And you say I have not done any. And the ECCB says, why haven't you? Because a bigger country told me I should do it. Okay, but where's your risk assessment? So we have to be fair, right? They gave us that opportunity to make certain changes, to go based on what is relevant for us. But if we haven't done that risk assessment, we cannot expect to reap the benefits of doing less or tailoring it to our own circumstances. So it may be a big push to start with, but at the end of it, it prevents us from wasting resources. It prevents us from hiring people to do things which aren't relevant to us. If I'm a bigger entity, right, my risk is going to be different from a smaller one, but you haven't done a risk assessment. So the ECCB is coming for an on-site. So you hire somebody and you put like 12 policies in place, spend a whole load of money, but they're not relevant because you just wanted to copy something from another institution. And then you're going to blame the ECCB or the Financial Intelligence Unit. Personal experience. That's not our fault. We gave you the opportunity to do less, to do simplified due diligence, to do things like that, but you didn't do the risk assessment. So you have to take some of the blame.
Very good. That's an example the ease of opening a bank account we're talking about right now. You spoke about that earlier? That's an application. Sorry, I didn't mean to jump in there, but I have to leverage it because we're working on this together right now. What is a low-risk account versus a high-risk account? Right now, everybody getting the same treatment. 2 pieces of ID, this, that, they're not all high risk. But we had not done, and what we came to realize that we were managing fear rather than risk. And now we need to manage risk because we're hurting people, real people, ordinary folks in the ways that we just cannot accept our countenance. Sorry. Thank you very much. Both of you. So good. Very, very good so far.
Thank you. Thanks, panelists. You've presented, some very insightful information. Sharo would have shared earlier on that institutions are faced with several legislations that they have to be compliant with: the Banking Act, money laundering, FATCA, CRS. We're seeing now that data protection laws, data protection and privacy laws have been enacted in several of our member states, not yet in Anguilla. But we're seeing now, we already have the money laundering reporting officer rule already front and center. We're seeing now the emergence of a data protection officer rule now that we have legislation being put in place. So I was wondering if any of our panelists can share with us if you have experience with any of our member states, or maybe even outside of the ECCU, member states who have been putting measures, controls in place to implement those data privacy laws. What challenges have they faced? How have institutions gone about syncing, data privacy, money laundering, FATCA, CRS, all these requirements? How is it managed? How is it best managed? What is the advice for an institution that is preparing to put controls in place to minimize breaches in data privacy? Thanks for that question. I don't have any particular examples of exactly, how others have been going about that, but I just have a couple of thoughts. The one would be first to ensure that you have interoperability of your systems, especially where you have, you start with your legacy system, and the governor already spoke about that those need development, so we can start there. But it's as if every time there's a new requirement that comes on stream, it's like you have to add a new module. Sometimes you have to go to a different service provider for that. And sometimes where you have all these fragmented, disjointed systems, it can create an issue, technologically, where the systems aren't really speaking to each other. You want more cohesiveness of your systems. So number one is ensuring that you have interoperability between those. So when it comes to cyber protection, of course, obviously dealing with the actual legislation, of course, you have to ensure that your data security is top notch. The privacy aspect is only preserved to the extent that your systems prevent, breaches. So investments will need to be made there. Unfortunately, that's part of doing business in this space. I mean, the requirements continue to increase, but we have to try and stay on top of them, basically. So interoperability of your systems, ensuring that you are vetting your third parties as well, because sometimes we think that we have our systems nice and tight, we have our controls, but the vulnerability lies within the third party, who isn't actually as secure as you might think that they are. And of course, you need to have data audits or audits of your system as well. That's done by an independent person. We don't speak IT, right? So we ourselves cannot be able to actually assess the security of these systems. So it's best to have someone else who speaks the language to say, hey, come in and and review this and see whether or not you find any vulnerabilities here that need to be addressed. So those are, just a couple of thoughts on how to address the issue of dealing with all of these regulations that come on stream. And of course, training. You need sensitization of your staff because sometimes the weak link is inside of our organizations. They need to be trained to recognize phishing scams, social engineering that are attempts to get them to divulge information or unwillingly, unknowingly give out passwords or sensitive data or just be an access point. So those things need to be considered when you're trying to, build out all these frameworks.
And if I may add, from the other standpoint, the issue is that I think they feed into each other, because we need to understand that for any effective AML-CFT framework, there needs to be that respect for data, there needs to be that privacy, there needs to be that confidentiality. When I left college a few years ago, there were two jobs, that everyone wanted. You were either going to be a teacher or you're going to work in a bank. I didn't get to work in a bank, right? And the thing is, though, times have changed, where the person who worked in the bank was the giggly 18-year-old. It was cool. It paid you more than other jobs, and a bank job was it. But when we look at our privacy and the protection of data, we need to look at who we're hiring. Because we spend so much time vetting the compliance officer, because we think the compliance officer is going to be the one to file the report with the FIU and have access to sensitive data. But what about your CSR, who unwittingly, perhaps, says something, shares information? What about your outsourced services? So what about your cleaner, who at the end of the day is walking behind the desk and seeing all of these confidential information? To what level have we also vetted those members of staff? So you could have all the fancy data protection tools, but if your people are weak, you're going to have a problem. And one of the critical things is not just for our customers, it's ongoing. Know your employee. So we hire somebody today, we don't check back, right? And a police record for me is pointless. You could have done 1 million illegal or dishonest things and you don't have a police record, right? So if our background checks are only looking at if you have a police record, that does nothing. Right? You have to respect the nature of the information you have, right? Who are the people we're hiring? And then I know the reputational risk, so you don't want to make it public that XYZ has done something in your institution. So you quietly let them go and then they pop up in another institution, right? That's problematic. So I think apart from all of the other expensive mechanisms to protect our data, we really need to look at our people, right? Because I think that is where we are severely lacking. The people we have in these roles that are exposed to this data, they are not as confidential as they should be. We need to appreciate and ingrain that culture of confidentiality. Make the risk known. Let people know what happens if there's a breach, right? And we need to really and truly act on that. So until we make confidentiality a critical part of who we are, not everybody in your institution needs to know everything. If you have somebody who feels they need to know everything, that's the wrong place for them, right? And I think it's time that we understand there must be different level of clearance. There must be different levels of access controls. We're small. You don't need to know everything. And if there's somebody who has a problem and always need to know everything, you probably need to look at that as well. Because why do you feel the need to know, right? So in addition to all of these other mechanisms, we really need to focus on our people and working in a hybrid FIU where we not only depend on the suspicious activity reports, but we do have the intelligence, we prosecute, we do everything. The people is the weakest link. Right? So I think as LFIs, you really need to focus on your onboarding processes, and that a background check prior, a background check after your interview and they've shared information on associates and things like that, and ongoing KYE. If you don't, you expose yourselves to major, major issues. And now the ECCB has administrative penalties for breach, right? Those exist. So it's not just a case where you're going to get a letter, a directive. There are fines and there are criminal penalties. So I think it's very critical that we look at our people above and beyond anything else that we will do.
We'll take the. Oh, sorry. So we'll go to Mr. Carrington, and then we'll take the last question from Leon. Before we move on, you have another opportunity to come back to ask questions. So we'll just, in the interest of time, thanks.
Yeah, I just want to add that from the standpoint of the international standard, FATF has recently changed or made an enhancement to Recommendation 24, which is about the transparency of legal persons and arrangements. And they have upped the ante on the issue of beneficial ownership, and that is being able to raise the corporate veil and understand who stands behind a legal person or legal arrangement. But even in doing that, they have stressed the importance of protecting the information that institutions hold. So even as FATF says, we really need to know more about individuals who stand behind these corporate entities and so on. It at the same time says, but we all need to do everything that is possible to protect that information and to restrict the extent to which it is used or available.
Thank you for that input, Mr. Carrington. So I'll turn to Ron.
So just some brief feedback. One on the data security and data privacy. I think there is a strong call and really an obligation on financial institutions, as we said, to protect data. But specifically, when we look at how very often our data is breached, it's generally through a particular user, whether it be external, it be the customer, or internal, a staff, a very own staff member through a phishing scam or whatever it may be. And the call for financial institutions is to look at the security on both of those fronts. And I think for us as a financial institution, the point that we're at now is that we're looking at two-factor authentication. And I mean, I think in some cases we all have that, but the question is how deep and how far are we willing to go to invest in our double-factor authentication? And for us, I think we've gotten to the point where we realize that it has to get to a point where it's biometric. And that is your fingerprint, your eye, your actual facial features being recognized on an application. And it may sound like something, boy, we really have to take a major leap to get there. But when you look at all these controls that you put in place, aside from that, someone who is intending to intrude on your data, if really, really persuaded to, can or may be able to find a way past it, other than them getting to the point where it has to be authenticated by the person in front of that application. So with that, I think the realization for us as LFIs is to get to that point, and then the legislation could support that type of initiative. And I also wanted to speak on Letitia's comments with regards to the risk assessment. And it is true, I do believe as financial institutions, we have taken some time to uptake the risk assessment and ensuring that we administer it properly. But I will say, I think we have to acknowledge the time factor. It's only, I would say in the past maybe 4 years that many of our territories have adopted or revised legislation to really enforce the risk assessment. And sometimes we tend to forget that sensitization and training is a very, very big part. So yes, we say it very often at our meetings. Yes, I believe the CEOs and many persons are aware, but you have to think of unlearning or detraining, if I may use those terms, some things that have been adopted for so long, for probably over a decade or maybe 2 decades. We've been looking at rules that need to be applied. We've gotten audit exceptions on certain things that we did not do. You did not have a utility bill for whatever reason, and you've gotten that for so long. Now you have this legislation and this expectation to apply it in a different way or take a risk-based approach. It's hard to now move away from that. So the sensitization, the training is going to be required on a consistent basis moving forward for our financial institutions to move into that route.
Thank you, Ron, for your feedback and your thoughts improving our systems. We would move on in the interest of time. just to go back to something I would have mentioned earlier, I would have alluded to the fact that the intersection between AML, CFT compliance, and data privacy poses unique challenges for LFIs. Ian, what are some of the ways you think that we can balance the competing demands for achieving AML, CFT compliance with the privacy rights of individuals, especially as data privacy laws evolve globally? Because we know it's only a matter of time before, it reaches our currency union.
First, let me say that again, when I looked at the mutual evaluation report, so far, 8 of the member countries in the ECCU have had the mutual evaluation. Montserrat report will be considered in December, so that's off the table. But of the remaining 7, 6 of the member countries got a compliant FATF recommendation 9. And that recommendation asks, do financial secrecy laws inhibit the application of the recommendations? So virtually in every case, the answer is no, that there are no legal impediments in the region to implementing the requirements of the recommendations. The issue now of privacy, I want to step back from AML because a lot of people seem to think that this so-called intrusion into privacy, requirement for KYC and CDD and whatnot, is an AML issue. I've only started with AML, but that's not true. Financial institutions have always had to manage their customer risk. If you are a bank, you have a credit risk exposure to every person to whom you make a loan. And you need to be able to understand who is this individual. If the individual is a corporate person, you need to lift the corporate veil to understand who are the persons that stand at the back of this veil. Insurance companies, if they're covering risk, need to understand the risk of the customer. And CDD and KYC is required in those instances as well. So I say that to say that I think AML sometimes is unfairly blamed when we start to do CDD and KYC and make some inquiries into customers. But it is a matter of managing the customer risk, whether it is at the credit risk level, at the AML level, or any other level. Then the question becomes, how reasonable is it, or to what extent do the financial institutions go to make inquiries into the customer risk corporate veil? We've discussed briefly the new requirements on the issue of beneficial ownership, where in fact you are expected to raise that veil and to understand who are the persons that stand behind an entity. I think all of those are reasonable measures and steps that any institution should take, whether or not there's a law that requires it, because they have to manage their risk exposure to any of their customers. The question becomes, and we touched on that, about what you do with that information, the care you take. Obviously, you have an obligation to manage that information and to protect that information. Another question is, but who should have access to this information? Again, in terms of the FATF recommendations, and even if we did not have those in place, my view is that most people would not object to institutions such as the FIU and law enforcement having access to that information, because to the extent that we are concerned about the integrity of financial transactions and the financial sector and so on, it is not unreasonable for institutions like the FIU and law enforcement agencies with the appropriate powers, obviously set up in law, to have access to that information. When we speak of beneficial ownership information and corporate registries, which are then a central authority where this information might be held, if we want financial institutions to manage their risk, then there's a case to be made that financial institutions should have access to that information that is publicly held. So I think it's clear that there are instances in which that information, one, should be obtained from the customer, and two, other agencies such as the FIU and law enforcement and financial institutions themselves should have some level of access to that information. You would probably be aware of the ruling of the European Court of Justice in 2022, which put a pause on that because there was the issue of whether the public should have access to that information. And the European Court of Justice in 2022 said no. It is not acceptable for the public to have access to that information, albeit some countries were going in that direction. So, in summary, I think that there will always be attention between what is reasonable for financial institutions to do to protect themselves and manage their risks. Where do you draw the line? And at the moment, I think a case can be made for government institutions having access with the appropriate legal authority to that information. But if you go by the report, they're saying, yeah, but can we justify the public having access? And they're saying no. And those are questions then that each country needs to ask for itself. That's all.
Thank you, Mr. Carrington. And we're going to have to cut the session at this point. Really appreciated the discussion here this morning, and our panelists. We would have gone over time. We have other, persons have to be at other sessions. So unfortunately, we have a premature end to the session. It would have really been, nice to feed some more questions from the audience and to get, some more discussions going from our panelists. But nonetheless, we thank you for your feedback. We thank you for your questions. And we hope that you have, a bit to take away from this morning's sessions, particularly regarding, the need for, implementing that risk-based framework for AML-CFT, for ensuring that we have, continuing enhanced due diligence for our customers and understanding who our customers really are in order to put, that design that framework to mitigate, whatever risk that might arise. And with that, Letitia, Charo, and Ian, I really want to thank you. Also, I want to thank the audience. I want to thank the participants. And I wish you continued good day.